Well, good evening there, traders from around the world. My name is James. I'm here on behalf of Pivot Point Trading, bringing you a little bit of a special impromptu lesson on the subject and topic of Bollinger Band squeezes. What I've done anyway over the weekend is gone through a lot of shares and I've found two quite interesting trade setups pertaining to the subject of Bollinger Band squeezes. What I'll do for this evening anyway is just talk about what they are, how they set up, and how to effectively trade them when you come across them looking at the trading world. So what I'll do anyway is just bring up two trades. We've got one here on Amazon, ticker symbol AMZN. And the second one this evening, which I found, is GS, and that stands for Goldman Sachs, large financial institution all around the world. So really what happens is during a Bollinger Band squeeze, what it means is that the volatility of traders trading that individual stock is quite low. The volatility becomes very, very suppressed. Oftenly, or very commonly anyway, Bollinger Band setups actually occur when the signals of trading become a little bit bifurcated. When there's not one clear directional movement in a share, it tends to move sideways in a very confined trading range. What I mean by that is when we take a look at Amazon, for instance, you can see that we've had or been in a little bit of a bullish trend as we've made a higher high and higher low up until January. We've had an earnings announcement which has come out. It's been interpreted negatively by the market. It's been priced in, and here we are for the month of February in a very tight, congested trading zone. Now at the moment, there's conflicting signals. There's signals telling us to trade bullish. There's signals telling us to trade bearish. For instance, we've traded down into support, and we've had some very, very nice bullish candlesticks telling us that, hey, Amazon might want to move higher. If I couple that with our oscillating indicators, you can see the stochastics is saying, hey, I want to move higher. So's the RSI. And you've got that bullish MACD cross. Usually when these three oscillating indicators are in agreement with one another, price will move in that direction. Having said this, if we couple that with additional analysis, you can see that we've got a bearish gap which is still open. So this area here is going to act as resistance. We also have a bearish exponential moving average cross, and you can see also if I flick back to the moving averages, or the MACD, we've got bearish divergence which is set up across Amazon. Now bearish divergence tells us that the momentum is waning to the upside, and it usually signals a terminal trend reversal. So you can see just by going through these couple of steps of trade analysis, you can start to put the picture together and say, well, I'm quite neutral on Amazon. I'm not entirely sure which way or which direction this share wants to move. Oftenly what happens again, when we get into a very tight sideways trading range, when we change to our Bollinger Bands, you can see that we get what we call a squeeze. Now this is just tracking volatility. It's telling us that price hasn't broken out, but when we get above the band, so when we get above the upper band or below the lower band, volatility usually spikes. Now what I mean by volatility is that a very clear directional movement is about to take place. If I bring up Apple, for instance, have a look at this Bollinger Band squeeze which set up in November 2013. As you can see, we get into a very tight sideways trading range. Traders are getting whipsawed back and front or back and forth. Buyers are trying to bid the price up, sellers are trying to sell the price down, but in essence, all we're doing is just tracking sideways. During this time, this is when the Bollinger Bands start to squeeze, and that is when you remain neutral. That is when you bracket trade a share. You have a breakout trigger, say for instance at $530 a share, or you have a breakdown trigger, often below support, below the intraday swing lows. In this example, about $504.90 a share. You remain neutral, but once that price, if I can zoom in on the detail again, once that price breaks above that resistance, breaks above those resistance levels, the intraday swing highs, it usually is enough impetus for the volatility to come in and drive the share either higher or lower based on breaking out of those Bollinger Bands. Now, if I translate that through to the contemporary market, let's have a look at Amazon. Very similar setup. The Bollinger Bands are starting to squeeze. You can see them coming down on price. Now, it's not a textbook squeeze. Usually, a share will actually trade sideways. Instead of gapping down and trading sideways, it'll just get into a non-directional trending movement. Now again, this setup is valid, but what I'd like to see in Amazon anyway is for it to just peter out around $350 a share for a couple of more days. Get that lower band even tighter, get that higher band even tighter, and then we can get these triggers down even tighter on Amazon for that explosive movement which is going to take place. So that's Amazon anyway. let me just translate now or move into Goldman Sachs. And as you can see, looking at the trading picture of Goldman Sachs, again, the trading signals are conflicting. Yes, we are battling with this primary bullish trend line. We're dancing all around it. However, again, if we just take into basic price movement, we have established a lower low relative to the low made in December. And on top of that, we are not breaking out and making a new higher high. So just based off those two signals anyway, we've got essentially a reversal situation taking place. However, we are still battling with that primary bullish trend. When we touch the primary bullish trend, we bounce. You can see historically we bounce. So you can see here, if you're looking at it without the Bollinger Bands, you can become quite confused. You can get whipsawed to death. But when I bring in the Bollinger Band studies, you can just see what's actually going on. The volatility, the movement in Goldman Sachs is suppressed right now. However, it's not going to remain suppressed forever, and that's when we get these squeezes. Again, here in December, a nice little squeeze. We break out above the Bollinger Band and we move higher. So a very, very smart trader, someone who actually knows technical analysis and can sit here and say they've traded a million Bollinger Band squeezes, is just to simply bracket trade the share and remain neutral. Set your contingent orders in good places, places above resistance or below support, depending on the chart, of course. And then just remain neutral. Be patient, be disciplined, and wait for price to confirm. When you enter a trade, you always need to know where your stop is going to go and where your target actually is. And we're looking for trades which are going to give us at least a 3-to-1 risk-reward ratio. Ideally, you do want that at minimum about 2.5-to-1. That means that you're going to make 2.5 times the amount of risk on that individual trade setup. It's what we call an edge in the world of trading. You need an edge to trade successfully and profitably, no matter which indice, which individual chart, which individual company. If you're trading futures, forex, anything like that, you need that risk-reward ratio on your side. And with Goldman Sachs anyway, that is definitely the case. So that's a pretty impromptu, again, lesson on Bollinger Band squeezes. If you have any comments, please post them below. I hope this has been helpful for those of you anyway who aren't necessarily I guess fluent in the world of Bollinger Band squeezes or how you trade them. If you want to know more, please sign up, register for our free trading course. It's 8 lessons, 90 minutes each, roughly 12 hours of free trading content, walking through the foundations of successful stock market trading as you transition into autonomous trading. That is my goal for you. So thanks a lot for watching this video. Give it a thumbs up if you enjoyed it, if you thought it was helpful. If it was, I'll continue to do videos such as this, which is going to aid you in your own trading. All the best, everyone. Have a good, profitable week leading into trading beginning the 3rd of March, 2014. Goodbye.